All right, here we are. Okay, so today we're going to talk about the key concerns that Sitzler, Burnett versus NAR and the co-defendants, the key concerns about that were brought up, the key takeaways, where our current system of buyer agency and buyer broker compensation came from, my philosophy about the housing industry, which I've been doing a lot more in-depth, thinking since this lawsuit happened, how we talk about commissions. If you may have seen the poll that I had sent out, and we got some results that were really good and interesting. So I'll share that with you. And then how to talk to the seller about the pros and cons of offering a commission to a buyer's broker, and how to show your value to a buyer's broker to get paid. I'm going to give myself a 45-minute timer so that I know when we're halfway through, so that we can hopefully move on to the buyer sections for sure. So the key concerns for this lawsuit were the clear cooperation policy required in multiple listing services, requiring that National Association of Realtors members, abide by their rules and offer compensation to the buyer's agent, and that because of this close connection between the National Association of Realtors, which I'll just call NAR, NAR had with these multiple listing services, which I'll just call the MLSs, that it had artificially inflated commissions. And ultimately, if you please put yourself on mute. Marielle, if you're able to mute everybody. Okay, so that artificially, inflated commissions, and the buyers wanted sellers basically artificially inflating commissions because of that close relationship between NAR and the MLSs. And the sellers wanted only to pay the listing agent, and they wanted buyers to pay their own agents. So the two main issues are decoupling the commissions, so each side pays for their own agent, and then allowing market forces to essentially negotiate the commissions down. So the key takeaways are that we will need to, when we talk about commissions with sellers, to talk about two separate commissions and the pros and cons of offering a buyer's broker fee. We are not going to indicate that agents are going to discriminate against homes because of low commissions. That's how we got to this point where the price fixing accusation, has some basis. We're going to show buyers the value that we bring to the table. We're going to sign a buyer agency agreement with each buyer if we want to get paid. You're going to be prepared to negotiate the buyer's broker commission with the listing agent or seller, prior to submitting the offer, which I don't know about you, but I've never had a seller agree to a fee before seeing the offer. So I'm just curious how that might play out. And I think that's where listing agents, I really strongly believe that anything we do to change what we're doing with buyers should already be something you're doing. There's nothing new to do with buyers for you that shouldn't have been done before. The main thing that we need to happen with buyers is we need the financing standards to change so that buyers who can't otherwise afford to pay the commission, so that they can finance that commission. So if you are already solid in your buyer process, the only thing you need to happen is that the mortgage industry changes. On the listing side, until that happens, we need to protect the whole industry, all buyers and sellers. When I say industry, I mean the buyers and the sellers. We need professional representations on both sides. So I strongly believe that listing agents, we need to fight hard to keep the buyer agency commission paid from the sales price, directed from the listing agent, because that looks out for everybody's best interest. It's the most efficient way for professionals to get paid. And it hurts sellers not to have that commission paid to the buyer's agents. And we'll go over that. I don't know if we'll have other sources of listings where we'll have to look at multiple listing services. I know in New York, they act a little different, and I believe there are a couple. So just be on the lookout for that. And again, pay close attention to what's happening in your state, your multiple listing service, and according to your broker. Key do's and don'ts. Don't say buyer's agents work for free. Don't ever approach the conversation like the commission is expected or that's how we do things. And definitely don't say buyer's agents won't show the home if you don't offer enough. It was never acceptable, and it's certainly not acceptable now. So in Pennsylvania, we have what's called a cooperating broker compensation addendum, which allows you to accept what's being offered in the multiple listing service as your compensation, or it allows you to request a different compensation based on what you've agreed to with the buyer. So you can continue to use that form. They also have a compensation addendum to the agreement. I'm not sure why that would be useful. Maybe, you know, somebody else on this call, maybe they're a broker like Vicky, but we don't really need to know the information right now. But the compensation addendum might be useful in the future as well, because it allows, you know, basically the buyer's agent to get paid the amount that the buyer had agreed to pay. All right, so ask your estate. So I did a little digging in preparation for today, and I found some interesting quotes, and I thought it was useful to talk about where did we come from? Like, where did the current system of buyer agency come from? And the Pennsylvania Association of Realtors gives us this quote. And in the PDF, which will be available to you after, there are some hyperlinks. So this is a hyperlink to an article. So it says, before the introduction of buyer agency in the 1990s, all agents affiliated with a brokerage were generally considered to represent the clients of any of the agents in the brokerage. If there were 10 agents, then each time one agent signed on a seller, it was as though all 10 and the broker were now fiduciaries and working on behalf of that seller. Since even those agents who worked with buyers were generally considered to be representing sellers via sub-agency, there was no direct conflict. Put yourself on mute, thank you. There was no direct conflicts if a broker worked with both the buyer and the seller. Then, once the idea of buyer agency was legally established, that led to the concept of dual agency, where a brokerage can represent both parties, but at the same time must ensure that it doesn't take any action that is adverse or detrimental to either party's interest in the transaction. To minimize individual conflicts, the law also created designated agency, in which the broker can specifically identify one or more agents within the brokerage to represent the client. This avoids a situation where all agents in the firm are considered to be representing a party just because someone else has brought them on as a client. So generally speaking, you know, every client that a salesperson brings to their broker in Pennsylvania, they're really the client of the broker. And because we practice designated agency at my company, I am the designated agent for that person. So it is no longer as if all of the other agents are also working for the seller. Only I represent that seller. And then if somebody else from my agency brings the buyer, they should have a buyer agency agreed with, signed with them, and they are the designated agent to work with the buyer. And again, if there are any questions, you could put it in the chat and Marielle could let me know, or if you feel brave enough and you could, you know, come off mute and ask me real quick. Okay. Agency relationships in Pennsylvania. So basically, no matter who pays, you represent the party with whom. Nicholas, please mute yourself. Let me see if I can. Okay. No matter who pays, you represent the party with whom you have a signed agency agreement. Just to review some of the other relationships you could have with a client, a transaction licensee is just an order taker and does paperwork. There's no advocacy at all. When there's a dual agent, again, they're restricted to not take any action that is detrimental or adverse to either party, and they're no longer advocating for one party over the other. And I don't know about you, but I've been in dual agent situations as a buyer, and I felt, and this is before I got my license, and I never really knew if my agent was working for me or working for them. And so I feel like a lot of the times people do walk away from the table, even if the agent was ethical, they do feel like somebody was, you know, got treated better. And they probably both feel that way, honestly. And this is not to say that don't do dual agency. This is to say that if your seller wants you to find the buyer for them so they can save on the commission, it's important for them to realize I will no longer be your advocate at that point, most likely. I will, you know, the buyer is either going to offer you less if they don't have representation, or I become a dual agent and I'm not advocating for you as a seller. So that's why this is important. And then again, seller and buyer agency, you know, when we talked about sub-agency, they all agents in the brokerage represented each party, unless designated agency is practiced, whereby exclusive representation was established by the agency relationship. All right. So the current commission payment structure, you know, market forces chose buyer agency in the 90s over sub-agency. And actually rolling the commissions into the sales price and ultimately the mortgage has been around for a century, according to Gary Keller. And it is the most efficient way to pay the professionals. And most importantly, if you do not already believe this, I think it will change the way you talk about things if you do believe this or learn to like adopt this mindset. Our current system of paying commissions is already cooperative between buyers and sellers. The buyer pays the entire commission through the sales price, and the seller decides the amount to pay to and through the listing agent. So you could tell me all day long that, you know, the listing agent gets paid by the seller and then they agree to pay the buyer's agent. But that's just the method by which we get paid. And that paperwork describes the how to, and our agency relationships determine who represents whom. So in no uncertain terms, the buyer ultimately is paying every fee associated with that sale and those commissions. I'm waiting for somebody to pipe up and argue with me on that. All right. So changes to the structure will ultimately, you know, net the seller the same or less. So like if nothing changes in the mortgage industry, let's say, it will net the seller the same or less. Unless VA loans and seller assist rules and financing change, meaning an FHA buyer can go from a 6% assist to a 7.5% assist, and 8% assist, and 9%, and 10% assist. If VA rules do not change around maximum seller's assists and, you know, Fannie Mae, Freddie Mac, then this will disproportionately hurt first-time home buyers, low and middle income buyers, and racial minorities. Plus, as it stands now, VA buyers are not allowed to pay commissions. So this would entirely eliminate a buyer who cannot, you know, pay all their closing costs. And, you know, if they already need a seller assist as a VA buyer, they already need a seller assist and they can't afford to pay the buyer's agent, then they either go without representation, maybe they go directly to the seller, but hopefully they're already working with a buyer's agent, right? Or they just can't buy that home. So I can't imagine that the VA is going to let that happen, because that would be very unfortunate. Yeah, and this isn't going to hurt the people that already have enough money to pay their down payment, closing costs, moving costs, and the additional commissions. It will definitely affect these four groups of people plus the VA buyers. Again, change isn't necessary to ensure proper advocacy. We already have measures in place to say who's advocating for whom. The logistical headaches that could come up are searching in multiple listing services for listings, require a call before every showing, and require sellers to agree to a commission in advance of an offer. So, you know, in my limited knowledge of the research, I feel like the multiple listings service is the most likely thing to happen if we were to say, you know, between the first two things. I feel like if you just get your buyer agency signed, and if the mortgage rules allow for a buyer to get a seller assist plus finance the commissions, then you won't need to call before every showing. You just need to show it, figure out the one the buyer wants to pay or buy, and then see what that agent or the seller is offering as commission to you as the buyer's agent, and then base your sales price off of whether or not, you know, the buyer is paying the commission, or as compared to the comparables. You know, let's say you have $100,000 house and they're not paying a commission, and that seller paid 6%, and you agreed with your buyer that you would get paid 3%. So now they're paying you directly 3% for this $100,000 house. You'd offer $97,000 because the comparable had two commissions in there. Whereas the seller, in the case that you're in right now, they're only paying one commission and the buyer's paying the other 3%. As an example. Let me see, there's a chat. Let's see. Okay. Why multiple MLSs? It's just a rumor that I've heard. In terms of NAR has rules to participate, you know, for MLSs, like there's like a very close connection between NAR and the MLSs, and a lot of MLSs like are getting in trouble because of the rules that NAR has. And there's probably somebody that can more eloquently say it, but there's being, I think the word is like a divestiture of this relationship. And, you know, this is a centralized resource, that the idea is that because we are members of NAR and we're forced to participate in a certain way in the multiple listing service, that if you have a bunch of people saying, well, we're withdrawing our association with NAR, or we're setting up this entirely new system, then, you know, you might end up with multiple listings. So I hope that's sufficient, because that's all I can say. And then, yeah, so, yep, that's that. And then this one requires sellers to agree to a commission in advance of an offer. So I don't know if you've ever worked with an off-market property or for sale by owner, and, you know, you say, hey, like, you're supposed to get your fee agreed to before the offer. Almost never have I ever had a seller agree to pay a specific amount until they saw the offer, even though it doesn't make any sense. It's about the net. So I think that's where listing agents, if it, you know, comes into play, listing agents are going to need to explain to the sellers, hey, this agent is supposed to negotiate their commission with you before putting in the offer. Let's agree to what they're requesting, because that's what they agreed to with the buyer. And then we'll respond to their offer accordingly. We will, you know, look at the net that you're looking to net, and we'll negotiate based off of that. Okay, so, all right, Kevin asks, so that means the buyer's agent is putting a seller assist in the offer to help defray closing costs, which would be the seller paying the commission tied into the agency agreement. Yes. So if, let's say, a buyer already plans on paying for their own closing costs plus their down payment, they can then just use a seller assist with no issue to pay, you know, their buyer's agent. The issue really becomes, where we need the financing industry to change, is if the buyer only has enough for their down payment and inspections and appraisal, and they need a seller assist to cover the rest of their closing costs already. Those are the buyers that are not going to be able to also pay out of pocket for a commission. And they're going to be the most reliant on the lender to agree to a higher seller assist, which would require an industry change, which is totally possible and predicted. That would most likely happen in response to this. Or get it paid, like, you know, by the seller, you know, not as an assist, but directly by the seller. There is talk that one very unlikely outcome is that a seller can't pay a buyer's agent, but my broker says that is highly unlikely, because it doesn't sound constitutional to say that you can't pay somebody if you want to offer to pay them. The most likely outcome is that the commissions will not be advertised in the multiple listing service directly. And that's why I say, if you have your buyer agency, you figure out how the buyer can pay for that commission, like if nothing is offered, if you solidify that up front with the buyer, you don't have to make all those calls. Just go shopping. And then you figure out, all right, I want to make an offer on this one home out of, let's say, 10. All right, now let's see. I'll call the listing agent, find out what the commission offered is, put that, you know, in our compensation addendum agreement, and then make the offer based on knowing what is being offered by the seller and based on the comparables. Okay. I think I meant it. Let's see. Okay, how do I go back? Okay. Wait, I feel like I wanted to go. Okay. All right, there we go. Okay, yeah. So this was a very interesting way of thinking about agency. And it comes down to, when does conflict of interest or conflicts occur? So when lawyers get involved, the conflict already exists. When real estate agents help buyers and sellers, the conflict doesn't yet exist. So our role is really to create conflict so that a buyer and a seller can come to terms and go to closing. Okay. So, and again, these are hyperlinks to articles. So from National Association of Realtor, one common source of conflict within an agent and consumer relationship is through something I like to call competing consumers, which can occur under several different scenarios. One of these scenarios, called direct non-conflict, is actually a good thing. This is where an agent or cooperating agents. Christine, go on mute. Christine, go on mute.
Right. Yeah, sorry about that.
Okay, you better be making a deal.
Thank you.
Okay. One of these scenarios called direct non-conflict is that a conflict is actually a good thing. This is where an agent or cooperating agents act as a catalyst to bring consumers and a property together. When you get right down to it, this is the primal function of the real estate profession. Conflict develops when we add advocacy to this primal function. So the way I'm interpreting, I feel like there might be multiple interpretations of it, but my interpretation is the conflict occurs because each of us is advocating for our own clients that were the primal function of our profession, which is to bring the two parties together. And then the sixth reason our understanding of agency is clouded. Overall, the most important task isn't necessarily price related. It's to successfully consummate a deal for the client. Ironically, this objective is often more easily accomplished when a buyer's agent acquiesces to a higher selling price, or when a listing agent is able to convince their seller client to reduce the price in order to consummate the sale. I mean, how often are we working to convince our buyers and sellers to take less or pay more to get what they want ultimately, which is either to sell the house or buy the home? And we're helping them see beyond the immediate transaction and get to the reason they are in the transaction, which is the next step in their life. So, and this is where in that dual agency situation where if both parties feel like nobody was represented or the other party was represented, it's the agent probably did a good job because nobody's going to be 100% happy. All right. Kevin said something about a push to have mandatory attorney involvement in New York. Oh, goodness gracious. I really hope not. I don't know that that's really needed here. I don't know that. Yeah. Okay. So my philosophy, as I was thinking about this, is that unlike any other industry, like not the car industry or I don't know, like we often talk about law and car industry when we're talking about housing, but it's so unique. It is foundational to the American dream. It is how we build wealth. It's where we live. You know, it's where we plant roots. It's where we live in communities and participate in society. So it's unlike any other industry that we are ever going to talk about. And nearly every seller is also a buyer. So each benefits from the current structure, just on one side of the deal or the other. So the only reason a seller is not a buyer is if they are no longer living, they're going to assisted housing, or they are moving in, they're renting for a period of time. But chances are a buyer or an owner is going to be a buyer again, even if they're renting for a short while. So essentially what happens is we each, and I don't know if you've ever sold a house of yours and how you felt when you sold it. I have felt like, you know what, I'm stewarding this house for a while. I got it to a certain place, and now I'm selling it to the next person that I hope takes it to the next level. And it's kind of like I'm bestowing on them, a teenage child that's going off to college. Now it's your turn. I've done what I can. Now it's your turn. So our housing, is just, we're all just swapping houses. That's all we're doing. And we're all on both sides of the equation at any given point. And what's more important is that any effect in one segment of the market is going to affect the others. So if you think about student loan debt, if student loan debt is preventing buyers from becoming first-time home buyers, who are those first-time home sellers selling their first-time, I forget what, starter homes to? Who are they selling their starter homes to? Well, if fewer buyers at the bottom end of the market can afford to buy, then the people who are looking to be move-up buyers and sell that first house and buy their next house, they're going to be stuck. Similarly, somebody who has a move-up house, maybe they have a big suburban home, they raised 3 kids, now they're all in college, they're empty nesters, they want to move into the city, into a condo. Who's going to buy their home if the people who are buying the prior homes couldn't afford to because of the first group of buyers couldn't afford to buy their homes? So there's no one, you can't affect one segment of the market without affecting the others. It's like, it's it trickles up. And then again, because of the complex process, I mean, I don't have to convince you this. once you get into the deal, people, buyers and sellers say to us all the time, oh my gosh, like, thank God you're here. I never realized how complicated this is. And how do you remember how to do all this? You know, they're amazed at how complex it can be. And there's so many parties, there's so many rules, there's so many things that, you know, overlap with each other, that everybody benefits from everybody being professionally represented. Even if, you know, I, as a seller, I benefit from the buyer having a buyer's agent, because we keep deals together. We help talk people off ledges. You know, even as a seller, I remember having an inspection and being like, no way am I doing that. And I was like, oh, that was your seller hat. Put on your agent hat. And I was like, Stacy, calm down. Even if you kept this house, you got to take care of it. So like, just deal with it, you know? So we are problem solvers, and everybody, like I said, benefits from, you know, being professionally, everybody else being professionally represented. And I don't know if you've ever done dual agency, but I once forgot to write something down, and there's nobody to blame but me. If I had another agent to communicate with, I would have definitely put it in writing. So there's definitely a benefit even to us agents to have another agent involved. And again, paperwork dictates who gets paid and how. Agency agreements dictate who advocates for whom. Okay. Nicholas asks, what are your thoughts on why this is happening? Hot market, too many unprofessional agents. Sorry if it's been covered. I came in 5 minutes after that. That's okay. So it started in, I think it was Illinois, and the case, I forget the name of that case, Moore or something like that. It actually is going to trial, I believe, next year. The Burnett case actually started after the first case and went to trial first. But basically, there was a seller that just said, I don't want to pay for the buyer's agent. I feel forced to, in order to participate in multiple listings.
How are you?
Stephanie, I don't know. I'm doing great.
Quick question for you.
You are, Stephanie.
I know you do business out there in Southwest Jersey.
All right. So Stephanie's in
Southwest Jersey. Do you have a roofing contractor that might be able to take a look and get an estimate for my client on a property in Turnersville?
Like the 3 buttons, the 3 little dots. It should say mute.
All right. I mean, I was on her picture. I think maybe she realized. Okay. All right. I think we're good now.
Oh, God.
Oh, Stephanie, come on. Why can't you hear me? Oh, there we go. Okay, mute. Oh, goodness. All right. You gotta love this. All right. No, so the seller felt forced again because of because of a membership in NAR, you know, required the MLS, required the MLS and the NAR associated with each other, that in order to participate and have the most exposure, the seller felt forced to be in the multiple listing service. And because of the required clear cooperation policy to offer compensation, he felt forced to. He decided that he was going to sell his home anyway, even though he had to. And then he started feeling more and more uneasy about it. And then I guess contacted a lawyer, developed a class action. And my understanding that class action is actually way larger than the one that just had its judgment on. So I don't think it's, I don't know if it's related to a hot market or not. Okay. All right. It really almost doesn't even matter how it came about. What matters is that this is how we need to respond. I thought it was very interesting. I read that commissions have actually they were actually standardized at around 5% until the Department of Justice stepped into the 1940s. So like, sellers paying agents that were involved in the transaction has been around like for 100 years, according to Gary Keller. So since the inception of real estate agents. And then when it seemed like it was like the National Association of Real Estate Boards. It wasn't NAR at the time. But they were like, yeah, it's 5%. Like that's what the commission is. And then the DOJ stepped in and were like, you can't do that. Currently our national average is about 4.97%. So again, we need to decouple the commissions and talk about the listing agent commission separate from the buyer's agent commission. We need to help sellers understand why it benefits them to pay the buyer's agent commission. And we need to be able to clearly show our value to buyers, sign a buyer agency agreement before showings, and negotiate the amount of the listing with the listing agent, perhaps for each house. But again, if you have everything solidified with your buyer and the mortgage industry has changed, then you won't need to worry about with every house, just the one that your buyer ends up buying. All right. So the National Association of Realtors has language about what to say in general about a consumer asking about the lawsuit. I will then break down what I am saying to sellers, and literally just said this 2 days ago to a seller, and they're like, yeah, that makes total sense. We should still pay a buyer's agent commission. So yeah, and so you know how if you say something confidently, 70% of people will believe you, even if it's not true. Well, you just need to be confident in what we do and why it benefits the seller. And you say, don't be weird about it. They're not, you know, it's not, sellers aren't going to be weird. They're going to get it. They want to work in their best interest. So basically, NAR says, we believe the jury reached an outcome that's neither supported by the law or in facts. We have very pro-consumer rule for local multiple listing service broker marketplaces, where listing brokers offer buyer agency compensation for the buyer's agent. Those offers can be any amount, can vary over time, and are negotiable. Nobody gets paid unless it's in writing. And the offer of compensation practice ensures efficient, transparent, and accessible marketplaces where, you know, more buyers will see the home and can afford representation. And this is everything that we've just talked about. Continued. So, you know, plaintiff said the wealthy people could still afford representation. That's just not fair. So that, you know, NAR is still going to advocate for our current practice. You know, agents who are realtors will still be there, you know, for clients to guide them. The verdict doesn't change the choices that buyers and sellers have when deciding to hire a real estate agent who's a realtor, and compensation will continue to be negotiable and set between the broker and their respective client, as it always has been. The problem in our industry is that not enough of us treat buyers as professionally and systematically as sellers. And I will, if you've ever been on any class with me, I will constantly say this over and over again. You are also opening yourself up to a fair housing violation if you do not treat every buyer the same. You need to have standardized practices with buyers, and it's only going to help you if you level up your game. If you don't already have, you know, a buyer guide, a buyer intake form, a way of pre-qualifying buyers, a way of having a consultation with buyers. It's so much easier when you demonstrate and show how you're going to help the buyer for them to agree to pay you. All right. So the poll. So almost 24 of you participated in the poll, and I just really put that out there to see what your mindset had been before the lawsuit, and to encourage you to think differently about or articulate more clearly, you know, the lawsuit, its repercussions, the 2 commissions, and your value. And of course, getting those agency agreements signed before showing homes. So 12.6% of you said that buyers pay the commissions. And that's my stance, because that's who ultimately pays the sales price, and everything gets paid from there. And again, advocacy is, you know, indicated by the paperwork, the listing agency paperwork. While it may say that the seller is paying X percentage to the listing agent and the listing agent is paying X to the buyer's agent, ultimately it is the buyers who are paying it over 30 years if they're financing it, and the sellers are agreeing to how much it is. It's already a cooperative effort. So I want you to start thinking in terms of the buyers are paying the commissions. 62.6 of you already talk about 2 commissions, which is great. So this group, I think this is 6.3% right here, if I'm not mistaken, talk about the broker's commission fee and spoke how we pay or offer to pay a buyer's agent from that. So this may be more of a vestige of the way we used to talk about things, which you need to move away from, which is, this is how we've always done it, or nobody's going to show your house. So we need to make sure that we're clearly articulating how it benefits the seller to have more buyers seeing the home, more buyers that can afford the home, and that it's the most efficient way for buyers agents to get paid. And it's already a cooperative effort. So I don't know what is being said in the conversations with the 50% who are already doing that, which is great. But we need to make sure we elevate these conversations. Okay, I'm just looking at the chat. Let's see, I believe. Okay. I don't think NAR, I don't know if NAR can possibly pay charge members. I don't know the answer to that. All right, 37.5% have buyers sign an agency agreement 90% of the time when you're showing a house that is not your listing. So, you know, I said 90% of the time because I fully acknowledge maybe you met somebody at an open house, and in order to get to meet with them one-to-one, you had to show them the next house, and then you have a conversation with them, and then they sign the buyer agency rep. So that was my reasoning for saying 9 times out of 10. So that's great. And the people who do sometimes, I'm not sure exactly, you know, how you're deciding whether or not to use it. I would say you're actually probably, and you know, any brokers on this call probably would say it would be better to do yes or no to everybody than sometimes, because again, fair housing, you need to treat everybody the same. And depends on relationship with the buyer. So I don't know what the context is here. I don't know if it's maybe I met them at an open house versus it was a referral, or it was a friend of mine versus not a friend. But regardless of what it is, if it's your friend, they hire you because they trust you, but they sign with you because they know you're a professional and you need to treat them professionally. And again, anybody you meet in an open house or in a cold scenario, you want to offer to consult with them. You know, has anybody offered you a buyer strategy session? More than likely they're going to say no, because nobody calls it that. I call it that. And then they're going to be impressed with what you tell them in that consultation. I think we're just afraid for them to say no, you know, so we just need to be more confident in the way we communicate the value of doing, you know, meeting for the consultation and becoming their agent. Okay. 50% of you establish your value to the buyers. So I included the people, or, you know, establish a minimum commission. So 37.5 said, yes, you have a minimum commission. And then the sometimes is 12.5%. You know, sometimes when I know that somebody is well over that minimum standard, I'm not even going to put the minimum in there. I might just put the percentage, because I know that's more than going to meet my minimum commission, because I don't want to indicate, oh, I would work for X dollars, you know, when meanwhile the commission's already going to be 2 to 3 times that amount. But so I included the sometimes people in the yes category. All right. All right, so these were some of the things that you guys answered, that if the buyer broker commission is not paid by the seller, how it could hurt buyers. And in yellow is what you said, and I may have, you know, tweaked it a little bit. In green is what I added for clarity, or, you know, for enhanced information. So we talked about, you know, first-time home buyers not being able to afford the down payment, closing costs, and commissions, and moving costs. So if they're already using a seller assist and they can't, let's say the mortgage doesn't allow them to finance their commissions, then they're not going to be able to afford, you know, that home or a home at all potentially. And as it is, some sellers don't even understand why a seller assist may be important. You know, I've had definitely sellers that really didn't understand it, and I had to really explain it. So this is just going to make it one, you know, step harder for that buyer to get the home. So a buyer may go directly to a listing agent and really have no representation in the process. You know, the buyer may not have enough money to put down as they would have. So let's say a 10% down buyer becomes a 7% down buyer. So certainly they can now afford to pay their agent out of pocket, but their monthly payment is going to be so much higher, and not that much, but it's going to be higher. So the higher insurance premium, because going from 10 to 7% is going to increase that. The amount of the mortgage insurance might be higher, and the premium, you know, multiplier will be higher. The interest rate will likely be higher as you pass down, you know, from 20 to 10, 10 to 5, and anywhere in between, you might have a higher interest rate. And you're borrowing a little bit more money, so it's more expensive because you're paying some things out of pocket rather than as a down payment. So it's going to be more expensive for buyers, and then harder to qualify because your debt to income ratios are going to be higher. Another thing is, you know, a buyer might have to shop in a lower price point to afford all the associated costs. Quite honestly, when interest rates rise, buyers will have to shop in a lower price point to afford the home, you know, to afford a home or have a home that they can afford, or pay more for a home with the amenities that they require. So agents who don't have them sign a buyer agency agreement might not want their clients to see homes that don't offer compensation. So this is one of the things that cannot be an option for us. We have to sign the agency agreement, and let the buyer know if there's at all a concern, and let the buyer discriminate between homes based on whether or not the seller is paying the commission. Again, all of this concern goes away if lenders allow the buyer to finance the commissions. But if they don't, you can't be the arbiter of whether or not to show the property, because you're going to have a buyer agency agreement. You're already going to be guaranteed that minimum commission. It has to be up to the buyer. And then I added VA buyers can't pay for agent commissions currently. So if the VA buyer isn't using a seller assist, they can use a seller assist for the commissions, or they can't buy that home if the listing agent won't pay for that. And honestly, if let's say the lending standards don't change, I would still ask, and the listing agent says the seller won't pay a commission, say, hey, I have a VA buyer, they're not allowed to pay, they also need a seller assist. Would the seller be willing to pay a commission in that case? If they don't have a better offer, chances are they would say, they talk to the seller and the seller might agree. So it can't hurt to ask. Okay, so let's see. We have a comment. So a prolific lender in my market said that lenders have to abide by Fannie Mae MAC guidelines, so the government is going to have to approve rolling commissions into the loan amount. Yes, not lending companies, exactly. So it has to happen across the industry, Fannie Mae, Freddie Mac, HUD, that sort of thing. If MLS removes buyer broker commissions when a property is listed, will the MLS have a field for agents to put what the buyer broker commission payout was when the property status is changed to sold? Oh, that's really interesting. That is really interesting, because arguably there could be a point in time in which all comparables in the MLS will only have one commission. If, let's say, we 100% went to the buyers pay the commission for the buyer's agent, so all of the comparables at one point in the future will only have one commission. This would be very helpful, that Austin says, it would be very helpful to know until that happens what the buyer broker commission was, so that you can properly compare one house to another house. There could be, I know appraisers will sometimes factor in sellers assists in their appraisal. So the appraiser might actually look at the comparable and call and ask. And honestly, when you're running your comparables on the buy side or for the seller, you might want to make a call if it's not included. And I have a feeling they're not going to include that information if they're not including it if they're not allowing sellers and agents to advertise the amount of the commission. Yeah, I don't know. Okay, let's see. All right. So I asked you guys, if the buyer's broker commission was not paid by the seller, how does this hurt sellers? And this is really the crux of everything that we need to be paying attention to. So it could limit the pool of qualified buyers, or buyers who choose not to pay the buyer's broker out of pocket. So this is especially in those lower price points where buyers already need seller's assists, and less demands equals a lower price. Although not ethical, seller agents may not show the home. And exactly right. And we can't say or do that. We have to let the buyer let us know, based on the agreement we have with them, whether or not we're going to see that home, based on what the seller is offering as compensation. The seller may not receive quality offers if the buyer puts their offer together without the help of an agent. All right. Mike C., put yourself on mute, please. Comparable properties included commissions in the sold prices. Offers will be reduced by the amount of the buyer's agent's commission. In effect, the seller will net the same. All right, where is Mike C? All right. Mike C. Sorry, I'm like, these dots are not showing. Oh, there we go. All right. Okay. Okay, yeah. So, again, this hurts sellers because let's say you're not offering the commission to the buyer's agent. Well, the buyer is going to make a lower offer because you're not paying the commission. So you're going to net the same. So why did you just add a barrier for the buyer seeing the home? And, with fewer offers or less competition for the home, the transaction might not be as smooth. So, it's like, how many deals became, mortgage contingency waived, no inspections, How many deals became that way? Because there were multiple offers and buyers are willing to buy the house as is. They were willing to waive the mortgage contingency, even if they were getting a mortgage. You're going to get better terms when you have more, better terms, better price, when you have multiple people bidding on the home. The green is something, okay. The green is something I added. So again, VA buyers currently cannot pay a buyer's broker commission. And if the buyer can pay the commission in cash, it could put the buyer in a riskier / higher loan to value ratio with higher standards for getting approved. Again, going from 20% down to 10%, 10 to 5, 5 to 3, or push a conventional buyer to FHA, which has stricter appraisal standards, which may require repairs of the seller. Or it could put undue pressure on the inspections because the buyer has no money for repairs. Let's see. Lori says RMLS in Nashville says they're likely to ask agents to fill in the seller concessions field more religiously so you can pull more accurate comps during this in-between time. I love that. I love that. All right. So what to say? This is, you're not going to say every line here to a seller. You're going to use what makes sense. And you don't necessarily say it as I've written it. I just kind of wrote out my thoughts and a general line of conversation I wanted to have with the seller. So when I had this conversation the other day, I said, have you heard about the class action lawsuit? The national conversation about buyers agents commissions, the class action lawsuit against the National Association of Realtors and major franchises. They actually said they hadn't heard of it. But I said the class action sellers claim that they were forced to pay the buyer's agent to work against them and pay them too much. They want each party to pay for their representation with the seller. And I added this line, with the seller paying from the proceeds of the sale and the buyer paying the commission in cash, because ultimately that's how they get paid. They will get paid currently if the mortgage lending rules don't change. While the decision is being appealed, I want to assure you that the commission is negotiable and that paying the buyer's agent fee will actually benefit you in the sale, and that not paying the commission may end up netting you the same or could be lower your net proceeds. May I share with you how and why this might be possible? Of course, they're going to say yes. Buyers already pay the commissions through the sales price. You and I will decide the level based on the market conditions. Nearly all, if not all, of the comparable homes an appraiser will use to appraise your home and on which your buyer will rely to make their offer, they already include both commissions. If we request that the buyer pays out of pocket for their agent's commission rather than allow them to roll it up into their mortgage as they are currently allowed, then the buyer might, at best, just lower the sales price by that amount and you'll net the same amount of money. At worst, buyers won't come to see the home because they can't afford the down payment, closing costs, moving costs, and the buyer's agent commission on your home, or buyers will go to a riskier loan type with a higher loan to value ratio. When a buyer goes from 20 to 10% or 10 to 5, 5 to 3, the mortgage insurance premium goes up, the interest rates go up, and the amount financed goes up. The loan becomes more expensive for the buyer and harder to qualify because of the higher debt to income ratio this produces. Buyers additionally may go from a conventional loan to an FHA loan to afford your home and pay their buyer's agent fee. The FHA loan has condition requirements that may require repairs from you. Or buyers can't afford the repairs on their own, so they will negotiate harder upon inspection. And this also eliminates veterans using their VA loan benefit to buy your home because they're not currently allowed to pay a buyer's agent commission. So you can see why offering to pay a commission to an agent who brings the buyer and helps us get to closing, can help you net the same or more. Oh, can you see, why offering can help you net the same or more than if we add that financial barrier for the buyer to afford your home. As far as the level of commission to pay, I charge X for my services based on my expertise and level of service. And of course, you're going to show them your services and marketing plan. Let's look at the comparables for your homes, for your home, active and solds, to see what most sellers in our area are offering to the buyer's agent so you can decide where you want to be among your competition. So then I will literally go through, I'm usually on Zoom, and I'll go, or if I'm in person, I will have it with me, and I'll go to the agent view of the multiple listing service, and I will search, and I'll say, I'll tell them the commission, 2.5%, 2.5%, 3%, 2.5%, 2.5%, 1%, 2.5%, 2.5%, so they're going to see where the cluster is. And then they might decide, like I've literally had not too long ago, like a month or 3 months ago, a seller say, I want to pay 3%. Like I want to attract the buyers. I want to pay the most. And most, sellers since then are, at 2.5, because that's mostly what people are offering. And if they ask, why can't you find the buyer and I just pay your portion of the commission? And I say, that's a great question. Sounds like you'd like to net the most money possible, right? Since there are thousands of agents out there working with a handful of buyers at any given time, and I'm just one Stacy, the multiple listing service offers us the best possible chance at finding the most number of buyers who would be interested in your home. More exposure equals more demand equals higher price, right? If I happen to find an unrepresented buyer and they are 100% fine with me acting as your agent, they may choose to lower their offer by the amount you aren't offering to pay a buyer's agent anyway, thus netting you the same. Or, as most prefer, my responsibility shifts to that of dual agent, where I'm no longer your dedicated advocate. My duty wouldn't be to put you above all others in the transaction. My duty becomes not to take an adverse or detrimental action against either party. So while I would love to find the buyer for you and save you the buyer's agent commission, your best chance of netting the most money possible, which is your ultimate goal, right, is to offer compensation to a buyer's agent so that we can attract the broadest market of buyer to your home. That makes sense, right? Great. What would you like to offer the buyer's agent? And of course, you may end up negotiating your share of the commission too. I mean, that's always an option. So then I started thinking, a lot of people think we're overpaid. And even in this last year, before this whole NAR lawsuit came about, I started to think, like, I think I'm worth a lot. Like, I think I do a great job. I've been doing this almost 20 years. But I don't know that the job I do is worth $30K, $50K. I will absolutely take that commission. But honestly, if you had to break it down, there's a level at which we each operate, and we're each going to have to figure out what level we each operate. And there's no longer the day of, well, I showed you this one house, I deserve X percentage. There's going to have to be more of a consideration about what you bring to the table and what work you did. But just generally speaking, why do we maybe get paid more? Why is there a bigger opportunity? Why are so many people attracted to this industry? Because we have the allure of potentially making a lot of money. But here's the trade-off. So we worked for free until consummation of the deal. Unlike lawyers and contractors who get paid at least partially up front, for a specific quote or an hourly wage, we take risks all the time. So we work for free all the time for buyers and sellers that never pan out. And then we work for somebody, where the deal was so easy and we got paid so much, and then there are deals where it was so hard and we got paid so little. So on the balance, it all works out, so I like to think of it this way. Like, I earn an average commission of X, and I do really feel like that is a pretty fair average amount. I'm going to give every single person I work with 100% of my skills. I'm not going to treat anybody differently based on what I get paid. And because some sellers are going to pay me double of my average and some are going to pay me half, then everybody benefits, because it all comes out in the wash. It all balances out. And we just don't know up front which deals are going to be easy and which are going to be hard. And if sellers tried to mitigate the amount of work we did for them so that they could save money by working like an attorney does, think about it. We hesitate to call the attorney because we don't want to pay an extra hour of their time for asking a simple question. So imagine during the transaction, you've decided an hourly wage, or our industry turned into an hourly wage. It will undermine the work we do for buyers and sellers, because they will not ask us to do the things that need to be done, and we also work on a Sunday, I'm helping get a rental listing of mine shown, and I'm at Longwood Gardens and I'm helping the agent get into the property. This is the things that we do, so we may seem to get paid a lot for doing very little, but we work for free a lot, and we get underpaid for things that end up being harder. And at the end of the day, again, every buyer is a seller and every seller is a buyer at some point, so this just benefits everybody on the whole. And then here's the example. I don't know about you, I don't do open houses as part of my lead generation, and I have only met one person in 19 years that bought a house through an open house. They weren't even my client. They were my seller client. They bought that condo through an open house before we met. But for the first time in 19 years, I had an agent who hosted my open house, had the buyer walk through that open house and bought that house. We know that happens 1% of the time. So I was like, wow, like that just happened. It finally happened. It's so infrequent that, a buyer buys that house. But also, so this seller, for example, said, well, why shouldn't she lower her commission? She worked for 2 hours. It's like, no. This agent did 10 other open houses where nothing panned out. She worked for free for 10 other sellers or for 10 other opportunities. And this one happened to pan out. Let's be thankful that they wanted to buy this house and she helped get them to the table to buy this house and ultimately get us to the closing table to buy that house. So I want you to start to think about how we justify getting paid what seems to be more than we deserve. It's because of the risk that we take and the things that we do above and beyond, and it all averages out, it all blends out. And there's 87% of sellers and buyers last year had an agent in their transaction, only, and 13% didn't. So most people are using agents and have an agent in their life, and so we'll help, and people buy, again, buyers are sellers, sellers are buyers. That's all I want to say about that. Jennifer says, preach. Okay. I love it. I get on my soapbox. I'm not at all passionate about this. Can you tell? All right. So what are you worth? Are you confident in your value? Can you articulate your value? Again, getting paid twice allows you to work for half the amount. And again, we seem overpaid in some deals and underpaid in others. And this just benefits people across all deals. So who is more than happy to pay a buyer's agent commission? For sale by owners, they see the value in a buyer's agent to bring them the buyer and help with paperwork. They don't see the value in a listing agent. So when you're having this conversation, well, first of all, when this all came out, I was like, oh, this is easy. It's so easy to get a buyer agent to pay a commission. And then everybody was like freaking out. I was like, what are you talking about? And then I realized, oh, you don't have a process in place. That's why you don't feel confident about that. Getting the sellers, like a lot of the times in a hot market, the listing agents don't see our value, yet. So like when we have like some people that don't see the listing agent value, and then we have some people who don't see the buyer's agent value, at least when we're talking to sellers, they see our value. Like at least that's good. But when you have people that have equal and opposite viewpoints, where the for sale by owners don't believe in the listing agent, they believe in the buyer's agent. And then the sellers who don't want to pay the buyer's agent commission, they see the value of the listing agent, but they don't want to pay the buyer's agent commission. Equal and opposite viewpoints, the truth is in the middle. The truth is in the middle. And then again, and the detriment of for sale by owners, without the listing agent, they have the less exposure and no professional advocacy. And they are, one of the arguments in the lawsuit was, why are we paying somebody to negotiate against us? Well, for sale by owners are more than happy to pay for somebody to negotiate against them. In the last 6 months, I've talked to more for sale by owners than I had ever in my life. And nobody seems to care that if they're paying a buyer's agent, that they're paying somebody to negotiate against them. And honestly, it's because they don't value what we do. Again, no matter who pays you, you work for the client with the agency agreement. Yeah, so it's frustrating if there's an uneven split. Well, you can't complain because you didn't prove your value. I understand your pain, Kevin. You have to prove your value to the buyer. You have to sign the buyer agency agreement. If you feel like you're worth 2.5, then you need to ensure that you get 2.5 rather than being frustrated that a listing agent's keeping 4 and offering 2. Quite honestly, I've never seen that split. I've seen 3.5 and 2.5. And actually, I recently had a short sale where it was a veteran helping his girlfriend with a short sale. I was like, you know what? I will do it at a discounted commission or I shouldn't say discounted commission, but a lower commission than I would normally do, and pay the buyer's agent 2.5%. And I'll take, I think I was doing it for like 2%. And I was like, but if this goes to a short sale, like if we can sell at market rate and not go to short sale, I'll take 2% and pay the buyer's agent 2.5. If this ends up being a short sale, I want 3.5, because at that point the bank is going to agree to the commission. And so I ended up getting paid 3.5 because I did a lot of work, a lot of work for that to get that to closing. But yeah, so we just now have to take responsibility for making sure we get paid our value. All right. Okay. So what you need to do is establish your value. Again, don't claim that your services are free. Are you going to, are you going to charge a flat fee for people you meet at an open house where they buy the one house you show them? Are you going to process all, buyers and only get a certain amount and do everything for them? Like, what are you going to do? Are you going to bifurcate how you work based like hourly or task based, or just a flat rate and you're just willing to walk away if somebody doesn't pay you a minimum commission? And get the agency agreement signed before you show homes. Summary. All right. So professional representation serves everyone. This is why the current system benefits everyone. Paying the commission is already cooperative. The buyers pay through the sales price. Sellers decide the amount. Comparable properties in the MLS already reflect the commissions. Buyers without agents will offer less to the seller, equals the same net to the seller as before. Listing agents may become dual agents where they represent no one. And offering to pay the buyer's agent commission equals a broader pool of buyers, which is the best price. How it can hurt the sellers as well as buyers is that it can push buyers into riskier loans with higher loan to value ratios, can make a conventional buyer go to an FHA loan.
I'm watching this video about, what to tell the sellers about this lawsuit.
Oh, what is Kate?
Good.
Yeah.
You're off. Katie, you're not on mute. Okay. Oh, Kate Steffley. Go on mute, please. All right. You're on mute. All right. Say nice things. All right. It can make buyers more dependent on sellers for repairs, and prevents veterans under our current lending standards, prevent them from buying the home without the compensation being paid for by the seller. And then legitimately, if let's say an agent has 12 houses and the buyer says, don't show me houses where no compensation is offered, you might only look at 6 houses. So it will, put them in second place if they're not offering it and the lending rules don't change and the buyers indicate they will only see homes where commission is covered by the seller. So the top priorities, and some of this is going to be a little repetitive because I had a lot of different thoughts and in a little different ways, but I think it's good to hear it over in different ways. Buyer's agents, you need to show and tell your value, and you need to do this in any market, and you need to get a buyer representation agreement signed. Listing agents need to advocate strongly for paying a buyer's agent commission because it benefits the seller. And it's no longer because that's how things are done or people won't show your home. It's because of the reasons that we outlined here. And again, it's predicted that mortgage financing rules will change to allow an additional assist so buyers can pay for their representation. So all of this might just not be for anything except for in that middle period when some comparables will have both commissions and some comparables won't. The bottom line is not paying the buyer's commission.
Sorry, Stacey, excuse
Yes.
me. We have a comment from Andrew Messeri.
Okay. Got it. I'll read it right now. Thank you.
Thank
Awesome.
you.
How is not showing homes that aren't offering compensation different than not currently showing a listing that is example 2% instead of 3%? Okay, so I have a minimum commission in my buyer agency agreement right now, and I say I will let you know if any of the commissions that are being offered are less than what you've agreed to pay me, and then you can decide if you want to see that home and pay the difference. I'll see if we can negotiate the difference up front, but if not, you've agreed to pay the difference. So my practice is not going to change. What might change is the practice of agents who don't have an agency agreement up front with the buyer and are requested to show certain homes. They see what the compensation is and they say, you know what? I'm going to prioritize all the ones that are offering 3% and higher, and not show the ones that are that are less than that. So what the change is putting having the agency agreement in place and putting the onus on the buyer to say whether or not they want to see the homes with less compensation than what they've agreed. Does that make sense, Andrew? Buyer's agent fee should be.
Thank you.
Okay, you're welcome. As a marketing fee. Well, I would love to have a conversation with you about that, Dawn, in one of our Thursday Zooms. I'm not sure. I want to know more about what you mean about that. All right. So not paying the commission. So this is a summary of everything I just said. Not paying a commission reduces the buyer pool, adds a barrier to showing the home and making an offer, puts more pressure on the loan and inspections, and would likely net the seller the same amount or less. So that's like a little bit of a summary that you can use, if you need to explain that to a seller. it's better to offer the buyer broker compensation that feels right to the seller, they choose based on the local conditions up front, and price the home in line with the comparable sales with that in mind. And then for the agents, for the agents, document and show your value to both parties. Sign the agency agreement with everybody with whom you work. Okay. Yes, great presentation. Thank you so much. It will be recorded, and yes, you will have access to it so long as you subscribe or you signed up on the Eventbrite or put your email in the chat. Okay. All right. The key takeaway: get your buyer process rock solid and buyer agency signed. Can't say that enough, although I probably said it 10 times today. If a mortgage allows for additional seller assist so the buyers can pay the agency commission, you don't have to inquire about it at every home. Just make sure you know what the buyer can afford up front. If the seller isn't paying, and then show every home they want to see that makes sense for that buyer, and adjust the price that you offer based on that. And in the meantime, I feel really strongly that listing agents need to advocate for sellers to pay the buyer's agent commission. All right, let's see. Oh, okay. So Don clarified that the buyer's agent fee, say to the seller, it's the marketing fee. Got it. I see what you're saying. Okay. So it's 3:10. We've got 20 minutes. This is amazing because I still have content around the buyers, but I just want to ask, are there any other questions about how to talk to sellers about this, how it benefits sellers, how it could hurt sellers, how it benefits buyers to maintain the compensation of agents through the sales price in the current way?
I have a question.
Great, Jane.
So I understand it going the other way where, in our market, a lot of agents tend to, the buyer broker payout oftentimes is 2.7. So if it's 2.5 or 2 or 1, I can understand, talking to the buyer about making up that difference. What if it's 3? What if I charge 2.7 and the payout is 3%?
That's fine.
Are we giving that, are we taking that extra for ourselves, or are we refunding that to our buyers?
So you're in Minnesota, correct?
Yep.
I'm in Pennsylvania. So our agency agreement said that my minimum standard is blank or blank, like a percentage or an amount, whichever is higher. So if you're offered higher, you can still take higher.
Okay.
Yeah.
Yeah, I think our paperwork doesn't really talk about that as far as the buyer representation agreement.
Okay, yeah, then definitely
the amount that we paid or a flat fee.
Yeah, your forms definitely will need to change then. I would definitely talk to your broker about that.
Yeah.
Okay. All right. So how to show value. Oh, wait, let's see. There's another question in the chat. I heard that in the lawsuit, some of the evidence against defendants was that brokerages have agent training that teaches scripts how to defend their commissions. I can't imagine any sales-based industry that doesn't teach scripts. So other than the do not say this, how do you think this will change scripts around commissions? I think what it was I think it was I'm not going to say the name of the sales coach, but it was pretty obnoxious. And it was like, this is the amount, and it seemed like price fixing. By tradition, we've gotten so used to 5 to 6%. I don't think it was collusion, but I think that we've just gotten so used to it. The way we've been talking about it in terms of agents won't show it, that's just the way we do it around here. Like, that's the problem. It's not that we have scripts, it's what that script said. I wish I could remember what it was, but I was like, oh yeah, like that just rubbed me the wrong way. Whereas everything I just shared with you today is just legitimate how this could harm you. Lower buyer pool, riskier loans, more pressure on inspections. Buyers just can't afford it. They're not going to see it, So I think, having scripts is not the issue, is what was said. All right. So this is how I do my process. I do a buyer consultation. I have an intake form. I prepare for my buyer consultation by preparing closing cost estimates and a preliminary multiple listing search for them. I send them a buyer guide that outlines the process of buying and my services to them. on the consultation, we go through the intake form, we go through the process. I have a flow chart, which I'll show you to show them the process of buying a home. I then go through the closing estimate that I prepared for them and reiterate, the steps in the process. So whenever, I don't know if anybody Will and Grace, if you've ever watched the show, there was a great episode. This is probably 20 or 30 years ago. And Karen, the friend, Jack followed Karen around. He took her checkbook essentially and followed her around and said, oh, she pays this money to this person and this money to that person. This is who Karen is. So basically the way we spend our money shows what we believe in and will give you clues as to our life, follow the money, right? So in this way, the closing estimate is a beautiful depiction. If you know me, I love math and numbers. So it's a beautiful depiction of the process of buying a home. So you show a flow chart first so that they can get it visually in their head, the different processes and, points along the way. And then you go through the closing estimate and you have an opportunity to reiterate. This is where I said you pay the deposits. This is, you paying for inspections. This is you escrowing money for the loan. Your first payment isn't until blank because of blank. So those two things together will make for a very robust conversation with that buyer, and they will immediately be impressed with you. I can guarantee it because I get that feedback all the time. And then you'll sign the buyer agency agreement, and then ultimately you're going to help them understand the pros and cons of each house. So, I always joke, I don't care what you buy, if it's shoes or a house, I'm here to help you make a great decision. So when you point out flaws of a home or things that are going to cause, that may be big capital improvements that they need a budget for sooner rather than later, like a new heater or a new roof, they're going to know you're working for them and you have their best interests at heart. All right. So I'm going to outline the key information I collect before the buyer consult and the key talking points of my buyer consult, and the language I use to ask buyers to make a buying decision at every house, whether it is yes or no, without sounding salesy. So the key information I collect before a consult is their desired monthly payment, the current and desired, the assets available for the purchase, and basic information about beds, baths, type of home, and location. I don't even need the sales price, but it is helpful to have a range in mind. That way you can input it, and then you back into what are the homes that they can afford based on their assets and their monthly payment. So I'm not going to teach you how to do all of this in this session. I have other workshops that I've done that I can also share with you through the platform, my learning management system, through my training program, Agent University by Stacy, so that you can see more about this buyer consult. It's called, I can't even remember what it's called, but anyway, so it'll go through it in more depth, but just to give you a broad idea. So before the consult, I'll set up a preliminary search. I'm going to look at tax amounts. I'm going to factor in insurance. I'm going to back into the sales price because at certain price points, the taxes might be too high. So we need to go down a price point. I'm going to run those closing estimates, and I'm going to find the highest price / taxes that buyer can pay based on their assets and their monthly payment goals. And then I'm going to save that closing cost estimate, or CCE for short, in my multiple listing service because that's where I can do it. Hopefully you have that ability too. And then that way I can rerun those, at a future point. I might get the lender's numbers and put them in there too. And then I'm going to PDF those closing cost estimates. I'm going to review them in the buyer consult, and I'm going to email them to the buyer after. In my buyer consult, I talk about, I review the intake form, which covers motivation, their showing availability, their current living situation, their financial situation, what kind of home they want, and how I can do a great job for them. And what I'm going to do is, based on how I can do a great job for them, I'm going to weave in stories into my consultation to demonstrate. So common things buyers are going to say is, I don't want you to pressure me. I need to take my time. I want you to guide me. I want you to help me find the right home. They don't even often say, I want you to negotiate the best price. That's not even their first priority for working with you and how you could do a good job for them. So throughout that, I'm going to show them how I'm going to advocate for them, and even pepper in stories about, for example, I had a client who's now selling their house. I helped them buy in 2020. There was the sewer pipe was in really bad condition. I advocated for them to get the sewer line insurance, and sure enough, within a couple months, it broke and they got it replaced for free. So now they have a brand new sewer line because of advice that I gave them. So I saved them, $5,000 at minimum, just by my knowledge and what I suggested. During the buyer consult, I'm going to review the process with that flow chart. I'm going to review those closing estimates, like I said, and then I'm going to ask them, based on, what they said, how to do a good job. I'm going to say, you said that you wanted XYZ from me. Do you think that we're a good fit? I'm going to ask, anything more to say about that? Okay. Do you think we're a good fit to work together? And then, if they say yes, I've never had somebody say no. Then you can explain the next steps to them. And you can say, so when would you like to start seeing homes? And let's say they say Saturday, and what's today? Wednesday? And okay, great. All we need to do between now and then is get you pre-approved and sign the buyer agency agreement that puts me to work for you. And do you have time in your schedule between, tomorrow to get pre-approved and pick the homes that we'll go see? And if they say no, well, then it's like, all right, well, then, you know what, why don't we postpone that first showing, or let's schedule that first showing for what, time next week can you do it? And then again, we're going to have to explain how commissions currently work in the agreement and in the marketplace, and let them know you'll let them know if the seller is offering less. I'm not going to go over this chart. It's 320, but this is just the way I think of working with the buyer, from setting the appointment to pre-qualifying them to going on the appointment, signing them, selecting, showing, and selling houses, making the offer, and contract to close. And I have a couple of points for each of them. This is the contract to close flow chart that I've created for my marketplace. It's not beautiful, but it does the job. So, I talk about when the offer is accepted, the first deposit. I talk about, the mortgage process. I talk about the title process. I talk about the inspection process. I talk about that second deposit. I talk about what if repairs were done by the seller and doing a reinspection, the final walkthrough, and closing. And this will be in your, you'll have access to this so you can create your own. The rating game. This is one of those seminal moments in my career. When I started using it, it changed everything. And it made it so easy to know when a buyer was ready to make an offer. So what would it take to make this house a 7 such that you'd buy it today? It's meant to create active engagement and ask for a buying decision at every home. And it recognizes showing homes is a process of elimination. And it's going to save you so much time from buyers thinking they need to take pictures, they need to remember each home, they want to take measurements. None of that. You don't need to do that. So this is the language of the rating game. I will read it to you, and I'll give you a couple of reasons why certain things are. It's out of 7 because it has to be odd. You need a neutral number that's in the middle. And I didn't make it up, but I was once in a home. I was at an open house with clients, with the agent upstairs. Oh, no, it was a for sale by owner, I think, and the owner was home. And I was like, you know what? This is a 7 for them. If we said 10 was the highest, and they overheard us say that this house is a 10, they would have known that they really liked it. Nobody's going to think 7 is the highest. So if somebody's listening to you, they're not going to know that's the highest. So at the very first home I show a buyer, I say, Susie, I don't own this house, and I'm not the listing agent. I'm here to represent you and help you get what you want. That is why you chose me, to help you buy a home, isn't it? As we walk through each house, tell me what you're thinking, what you like, what you don't like, what works, what doesn't work, so I can get to know what your needs and wants are and can help you make your best decision. Sound good? All right. So my clients find it really helpful when we play this game called the rating game. Before we leave each home, I'll ask you to rate each home on a scale of 1 to 7. 7 means you love the home and would buy it today. 1 means that you absolutely can't stand it and we should run away as fast as possible. You don't have to be as cheesy as I am sometimes. 4 is neutral and isn't allowed. You can't feel nothing. You either like it somewhat or you don't like it somewhat. Another way to think about it is anything above a 4, you'd rather live here than where you live now. Anything below a 4 is you'd rather stay put than live here. And at the end of our home showing, if you rated a 5 or a 6, I'm going to ask, what would it take to make it a 7 such that you would buy it today? Just in case there's something that we can ask the seller to do or have you do after you buy the home. Make sense? Great. Let's get started. So I know there are shorter preambles, but for me, every bit of this has meaning and it works. I have tried on other versions where it's like very simple. And I'm like, could you see yourself living here? Well, they've already been talking about it. I don't know. It didn't make as much sense to me as when I went back to the rating game. All right. All right. So this, I believe, is also available as bonus content on my platform. This is also bonus content. So if you want to assess where you are at in your when you're working with buyers or sellers, or just generally speaking, where you're weakest in your process, I have this worksheet that you can rate yourself on a scale of 0 to 3 on 33 areas of that you can, where you do your job. And if it's relating with buyers, obviously you might want to focus on that now so that you can shore that up and make sure you get paid if you work with buyers. And of course, through my learning platform, Agent University by Stacey, I have different boot camps, PA, Delaware, and Be the CEO boot camp, which is more about time management and business planning. But I teach everything that I've talked about in those courses. So if you wanted more training, you're welcome to, look at those links and sign up there. Okay, cool. We are at 3:25, and I think that was, yeah. So if you had any questions, you can certainly email me, Stacey@agentuniversitybystacy.com, or first name, last name @gmail. You don't need to email Eric, but you would get an email back from him at some point if you did sign up for our program. So let me just stop sharing. With 5 minutes left to go, what questions do you guys have, or any feedback? What was the most impactful for you?
I really like the scripts. They were helpful.
Great. Awesome. Again, and feel free to make them your own. And when, doing objection handling, always make sure people feel heard, that you agree with them, and, then offer doubt, create doubt and, create curiosity, and then handle that objection. Okay, let's see. So Lori says she liked how to frame how this impacts the sellers, since they're going to want to use those old comps that include 5.5% to 6% commissions. Great. Jennifer agreed that the scripts were helpful to make sure we are clear with buyers on what we are offering. Great. Any other questions? I'll stay on for 4 minutes, or if you have to pop off, you can pop off. But I really appreciate your time, and I wish you all the best in this post-NAR lawsuit market, no matter what happens.